How would you characterize how high the stakes are?
Well, I think the stakes are high in that the market's now sort of pricing in some sort of a ceasefire, some sort of a soft agreement. And if we don't get that, then obviously there'll be a lot of disappointment. But I suspect that we get some sort of a ceasefire. But I think the bigger story here is this, that no matter what happens at the G20 this weekend, we are in an extended era of deglobalization, which really means that this is death by 1,000 cuts. So it's not as if there's one event which is going to change things either for the better or for the worse, but this is a steady war which is going to play itself out over the next few years, and we've got to think about the implications of that for the global economy and who could possibly lose and even benefit from this era of deglobalization.
So Ruchir, who, let's start with the positives, who could benefit from this, and who are you optimistic about for 2019 growth?
Yeah, so for example, I think that I know there's been a lot of negativity around Mexico of late with what AMLO is doing, but if you look at the other factors, that could be one country which could benefit quite a bit from the rising trade tensions between US and China. I mean, Mexico was the big loser from China's ascension and China emerging as a major export powerhouse, and with so much of the outsourcing moving off to China. But I think that today Mexican wages are really low, the currency is extremely competitive, so barring some really negative surprise from AMLO, I think Mexico could be a big beneficiary from this era of US-China trade tensions. And then I think in Southeast Asia as well, you have countries like Vietnam, Indonesia, Malaysia. If you speak to companies now, what they're telling you is that they're quite inclined to diversify, that if in the past they would set up their factories and plants mainly in China, they want to diversify now because no matter what happens this weekend at the G20, they know this is a protracted battle and China is in the crosshairs of the United States now.
Who are the biggest losers?
I think that obviously China, because they've really sort of benefited a lot from this open trade regime over the last 20 years. And China is the world's largest exporter. So I think that China is a big sort of loser in this, I feel. And the Chinese currency is still very overvalued. So I think that the Chinese currency is bound to be weak over the next few years, whereas some of these other emerging market currencies have already adjusted, and so they possibly have much more upside compared to China.
That said, to what extent is emerging market stock market performance next year tied to whatever the US dollar does?
Well, I think it's very tight. That's always the case. So that relationship hasn't broken down. But the sort of good news may be that the dollar is pretty expensive just now on pretty much every metric. So the dollar is possibly at the top end of its very long-term historical trading range. So for the next few years, we expect the dollar to sort of be softer. But I think the big story is this, that we could be here at a pivotal moment. And what do I mean by this? This has been America's decade on any measure, especially on a financial market measure. The American stock market has tripled this decade, whereas many emerging markets have basically done nothing over the last decade. But we could be setting up now for a role reversal over the next few years, with many of the emerging markets cleaning up their house and carrying out the necessary reforms to stage some sort of a comeback over the next few years. So this could be a pivotal moment away from America to much more allocation internationally.
Ruchir, for that to happen, wouldn't we need the Fed to pause or at least calm down on the rate hikes and give some breathing room to these emerging markets?
Yeah, I think that's true, and I think that will happen sooner rather than later. So that's absolutely true. But I think that we're seeing some signs of that already. But as you pointed out, the US dollar is really the key, because the time when emerging markets and global markets in general outperform the US is when you have a weak dollar. And my point is that yes, the Fed may still have a bit more to go, but the dollar is very expensive today. So I don't see that much upside left for the dollar, more than 4 to 5%, let's say, over the next few years. And I think that the downside could be closer to 20% or so over the next few years.